Today, we're talking about new hires, what actually happens after a new employee is hired, and what the HR, payroll, and finance teams do behind the scenes to get everything set up properly. In a typical Australian business, the new employee first receives their employment contract to sign. This contract isn't just a welcome letter, it's the formal document that explains the employee's pay and conditions. It includes things like their start date, position details, employment type, permanent, full-time, part-time, casual, fixed term, contractor, salary, and sometimes bonus arrangements. It also references key company policies, including leave entitlements and how leave accrues. This is the document payroll relies on, so it needs to be clear and signed. Once the employee signs the contract, they usually receive a bundle of onboarding forms. Most commonly, this includes the bank details form, superannuation choice form, and the tax file number TFN declaration. The employee needs to fill these out carefully, sign where required, and submit them back to the business. And this is where payroll work really begins, because payroll doesn't just type information into a system. Payroll has to check that the information is complete, correct, and supported by documents. Now, I'm talking here about large companies, the kind with anywhere from 2,000 employees to 30,000 employees. In those organizations, the new hire process isn't occasional, it's daily. A new hire team might process anywhere from 3 to 50 new starters every single day. So the process needs to be fast, but more importantly, it needs to be consistent and accurate, because even one small error can create a big mess later. Once the hire is approved, HR usually creates key identifiers like the employee ID and often a position ID. Finance then provides the cost center. These aren't just random numbers. They are critical for payroll setup, reporting, and budgeting. A quick explanation here. The position ID is basically the job slot in the organization. It can carry details like the role title, classification level, location, reporting line, and sometimes award or EBA-related information. Think of it like a specific seat in the company structure. People can change, but the seat still exists. The cost center is the accounting bucket, the part of the business that owns the cost of that employee. When finance runs reports and budgets, they rely heavily on cost centers. If the cost center is wrong, the business reporting will be wrong, and fixing that later is never fun. Usually, HR raises a ticket for payroll and attaches all the documents: the signed contract, bank details, TFN declaration, super choice form, and any other required forms. Payroll then picks up the ticket, and this is the moment where payroll needs to slow down and check everything properly. Before entering anything into the payroll system, payroll officers need to check all documents thoroughly. Not a quick glance, a real check. Are the bank details there? Is the BSB valid? Has the employee provided a TFN declaration? Have they nominated super? Is the contract signed? Is the start date clear? Is the salary clearly stated? Do we have the position number and cost center? If anything is missing or unclear, you don't guess. You stop and confirm. And this is the golden rule in HR payroll world. Do not assume anything. If information is missing, doesn't look correct, or doesn't match other documents, you do not proceed. You ask questions, you follow up, you escalate if needed, because payroll accuracy is not optional. People rely on it, and compliance depends on it. Now let's talk about payroll systems. Many big companies use platforms like SAP, Chris21, ADP, Oracle, PeopleSoft, and others. Inside these systems, there are different internal pages or screens for each part of the process. For example, pages for position details, cost center, bank details, tax, super, leave, and work schedule rules. A lot of these systems also have wizards, which means once you start a process, you click next, and it moves you through the pages step by step. It's helpful, but it can also create a false sense of confidence, because the system will happily let you keep clicking next, even if you've entered something incorrectly. Most payroll systems are also date-driven, and that's a good thing. For example, if an allowance is paid for a specific period, you enter a start date and end date, and the system applies it automatically during each pay run. But you also have to be careful with dates. If you delete an old record or enter the wrong effective date, the system can trigger retrospective adjustments, and suddenly you're fixing more than one pay run. You're fixing history. New hire is not something you treat like simple data entry where you can just correct it later. Small errors can turn into big issues because payroll is connected to tax, super, leave, reporting, and compliance. So let's go through the key areas that must be right. First, you confirm the employee doesn't already exist in the system. You check the name and employee ID details properly. Duplicate records create major issues, especially when someone gets paid twice or appears in reports twice. Then you enter or confirm the hire date. This sounds basic, but a wrong hire date can cause problems later. Things like leave accruals, probation periods, service dates, long service leave calculations, and reporting. Next, you enter the hire reason code, the position number, cost center, payroll area, correct state, and sometimes an EBA or award code, depending on the organization. And this is where I want to highlight something important. State matters a lot more than people think. Someone might think, if I accidentally put QLD instead of NSW, the pay amount might still look fine. Sometimes the gross pay might look okay, but the back-end impacts can be huge. Payroll tax reporting might go to the wrong state. Public holiday calendars may apply incorrectly. Long service leave rules and other conditions can be linked to state or location. EBA codes can affect pay rules and entitlements. So one small field can create a long chain of problems later, for payroll, for finance, and for the employee. That's why we keep repeating, don't assume, don't rush. Next, you enter personal details. You enter the employee's full name, date of birth, and details from the TFN declaration. You also enter address details carefully because payroll and HR systems use these for communications, reporting, and sometimes compliance checks. Emergency contact details may also be included depending on the company process. Then you move to bank details. This is one of the most sensitive parts because one incorrect digit can mean the employee doesn't get paid. You enter the account name, BSB, and account number carefully. Also, some banks validate account name formats, so it's important to follow the form exactly and ensure details are complete. Now we come to superannuation. Superannuation is Australia's retirement savings system where employers contribute money into an employee's nominated super fund. Most employees will either join the company's default super fund, nominate their own existing fund, or choose an SMSF, self-managed super fund. You must check the Super Choice form carefully and make sure it's signed where required. If the employee chooses the company's super fund, it's usually straightforward because the fund details are already set up in the system. If they choose their own fund, you need to make sure the details are complete, typically fund name, ABN, USI, Unique Superannuation Identifier, and membership number. If it's an SMSF, the details are different. Fund name, ABN, bank account name, BSB, and account number. And where possible, you should validate details like the ABN online to confirm the fund looks active and legitimate, because incorrect super details can cause delayed contributions and compliance issues. Next is tax details, and this is equally critical. The TFN declaration includes choices that affect how much tax is withheld. Things like tax-free threshold, residency status, and HEC loan selections. Many employees find the TFN declaration confusing, especially certain sections. Payroll officers often notice when something looks incorrect, but payroll generally cannot just change the employee's declaration. The correct approach is to contact the employee and request an updated form. If the employee doesn't respond, payroll must process based on the form provided, even if it results in higher withholding, because payroll must follow the employee's declaration and stay compliant. After that, you enter work schedule rules. You check the contract carefully. Is the employee full-time, part-time, casual, shift worker, contractor? What are their standard days and hours? Some companies have work schedule codes provided by HR, and sometimes payroll needs to select the correct schedule based on the contract details. This is also connected to earlier setup like state location, because public holiday calendars and other conditions can apply differently. Then you reach the salary screen, another critical area. You confirm salary details from the contract. Some companies use table rates where you select the classification and the system automatically calculates the correct rate. Other companies require you to enter the salary amount manually. Salary screens can also include pay scale information, payroll sub-area settings, and EBA-related codes that determine entitlements and calculations. If you're unsure, You ask a colleague. You do not assume. And depending on the agreement, you may also add allowances like tool allowance, site allowance, travel, or other conditions. There are many other important pages depending on the organization. Leave quotas, probation dates, visa-related information, right-to-work checks, and more. Each company and system will differ, but the mindset stays the same. Enter accurately, check documents, and don't guess. Once everything is entered, you review the setup again to make sure you haven't missed anything. Then you generate a simulation payslip or test calculation. You check ordinary hours, salary amounts, tax withholding, super setup, and bank payment details. Finally, in many organizations, another payroll colleague will review and audit the entry across the key pages to confirm everything is correct before the employee goes live for the pay run. And that's the full new hire process. Done properly, the employee gets paid correctly, super is set correctly, tax is correct, reporting is accurate, and everyone's life is easier. Done poorly, it creates issues for the employee, extra work for payroll, and reporting problems for finance. So if you take one thing from today's video, let it be this. New hires are not just admin. They are the foundation of accurate pay, compliance, and employee trust. Take your time, check everything, and remember the rule. Do not assume anything. Thanks for watching. If you want more real-world HR, payroll, and finance content for Australia, make sure you like, subscribe, and share. And tell me in the comments, what part of new hires causes the most confusion in your workplace? Tax, super, work schedules, or those mysterious codes that only one person in the company understands?